So in exercise 7.8, you didn't get a good view of this task as you went through the textbook. So this video should be pretty helpful for this one. So on April 30th, we are asked to actually make the entry in our journal of paying the sales tax. What you looked at in your chapter and in the video was saving that money that you had collected for sales tax, but you hadn't actually paid it. You were just putting it into sales tax payable. Any payable account is a liability, so the normal balance in a liability would be a credit. All right, and you can see I've already got this set up that we are going to debit sales tax payable because we're actually going to pay for it. So as you make your sales and as you account for your sales tax, you're holding that amount in your sales tax payable account, and now it's time to pay it. So April 30th is the end of a quarter, or maybe they pay their sales tax monthly. You can see on page, the form that you would fill out on page 213, the form that you would fill out for your specific state, and they're all going to look a little bit different, and you can see this is a pretend state. And as soon as they write in what the state tax is, it will change, and even in Wyoming it changes depending on what money is being collected for certain projects or whatnot. And then some of the money collected goes to the state, some of the money collected goes to the county that you live in. At any rate, that changes no matter where you live, so that's just a figure that you're going to have to keep track of as you do these transactions in the real world. All right, so back to our pretend world. We have been collecting our sales tax along the way, and now it's time to make our sales tax payment with cash. So they've given us the sales and sales returns and allowances accounts so that we can calculate the net sales and then calculate the 6% of that. So sales for the month or the quarter or whatever, I think it's the month, were $230,000. And sales returns and allowances were $4,000. So we're going to subtract $4,000. And so we have the amount of $226,000 of net sales, and that's the amount that we need to pay taxes on, and we're going to be paying 6% on that. So now multiply that by 6%, and the amount of sales tax that we are going to need to pay is $13,560. All right, so then we just make the entry here in the debit of sales tax payable and the credit of cash. And the little note here even reminds you, I left that there so you could be reminded that we used net sales and 6%. Okay.